Welcome everybody to Wall Street Reporter's next super stock live stream for today, August 20th. Our feature presenter once again is Weyland Tech. Stock symbol is WEYL, and the CEO is Brent Sun. So again, those of you who are new to our program, our goal is to bring you stocks which have 10x to 100x upside potential. If you've been following us for a while, then you know we've had a couple of major winners come out of this platform. We've had Cytodyne up 2,000% since last year. We've had Imagine AR and Nextech, which are up between 1,300 and I think it's 1,500% now. And today we're going to find out if Weyland is our next super stock. The company's up from about $4 when we introduced it to a recent high of $10.50. Stock is around $7 now after a pullback, and we're going to learn about the latest news of what's coming up for the company and see if this has 10x plus potential for the coming months. So again, we're focused on companies which have the next super stock. Our criteria is companies which have three things going for them. One is they're going after major market opportunities, multi-billion-dollar market opportunities. They have catalysts in place which can drive transformational growth in their business and in the value of their stock, and they are now at key inflection points. We're right at the threshold of that explosive growth, so that's what we're looking for. And again, the main advantage of these events is that you could watch the presentation, ask the CEOs your questions. We're going to have an extended Q&A session. I'm hoping we're going to have some great questions from the audience today. So again, ask your questions to Brent and then decide for yourself if Weyland Tech is the next super stock. With that said, Brent, take it away.
Great. Thanks, Jack. Glad to be back. To those of you who are joining us for the first time, thank you. I'll be walking you through our presentation and then, as Jack mentioned, opening it up for questions. We are Weyland Tech. We predominantly work in mCommerce or mobile commerce, eCommerce, fintech solutions, and have been around for the past 6 years. I'd like to start with key statistics. Again, our symbol is WEYL. I would like to mention up front, we have filed for a name and symbol change, which should be approved next week. So we will have PR around that, as well as probably an investor conference call. And we'll certainly be back and talk more about the reasons behind that, both internally and then certainly from an external branding and perspective. So our current stock price is in the sevens. As Jack mentioned, we were recently down at 4 when we were initially introduced to Wall Street Reporter. We've recently seen a high of $10.50 a share. And additionally, on this past Monday, I filed what's called a Form 4 with the Securities and Exchange Commission, where I purchased additional shares at a price average of $7.70. I purchased 11,500 shares at that price, which is a continuation of my purchases over the years. As you can see, our 52-week high and low, that is actually a misprint. Our 52-week low is $1.80 and our high is $10.50. We've been trading better recently. The average volume has increased over the past month to where we're now trading about 40,000 per day. Shares outstanding right at almost 13 million, and our market cap, which I would like to point out, right around 100 million, is only about 2.2 times our revenue. A little bit later in the presentation, I'll be describing why this is notable and certainly how it stacks up against our peers. We just reported our second quarter this past Friday. We had an increase in revenues and also a nice contribution from the recent acquisition of Logiq, which we acquired in January. So as you can see on the on the trailing 12-month revenue column here, we're trailing with about 43.3 million, and the Logiq contribution was about 6.7 million to that. But again, they've only been part of the company for the past 2 quarters. So over this year, we expect the contribution to end up blending out to about 33% of our top line revenue. Total assets, 24 million. We've got virtually no debt. Full-time employees, 37, and we are on a fiscal year end of December 31st. Moving on, what I'd like to do is describe who we are and what we do. We do operate in markets outside the US, in North America. We have a specific regional focus, which I will describe shortly. But our 3 primary business units are Create App, which we launched 6 years ago. It's our core product. It is a subscription-based, what's called platform as a service. But essentially what it is it's for small businesses to get their offline business online within 2 hours or less. We like to call ourselves the Shopify of mobile, which I'll also describe shortly. Our second business unit is our recent acquisition of Logiq. Simply described, advertising technology or ad tech, and then big data. Big data is a theme which is at the forefront of a number of very highly valued companies, which in the current environment is very relevant, because what big data essentially does is takes user behavior from e-commerce. So when you're shopping online, all of your behavior, whether it's on websites or native apps or within your favorite online shop, whatever it is that you're doing can be tracked with your permission. And what these companies do with that data, what we do with that data, is we enable our customers, being those businesses that sell online, to offer products and services that are better tailored to their users' buying habits, behavior, and preferences. So data is extremely important in today's environment of e-commerce and mobile commerce, because being able to drive products and services that are best suited to the audience adds a considerable amount of value. Our third business unit, it is a fintech or financial technology solution for emerging markets, and there's one in particular that we focus on, which I will go over shortly. But the brand names that we operate under in that market are ATOS Pay and ATOS Go. I'll walk you through those shortly. What I would like to say that is extremely important, and I believe all of you are familiar with, is what is now considered a new normal. What does that mean? You think back 6 months ago, would it have been normal had you gone to your boss and said, I'm going to take off for the foreseeable future. I'll be working from home. If you need me, you can call me, or let's have a Zoom meeting. If you need me to give a sales presentation to one of our customers, we can have it on Zoom. 6 months ago, probably not so normal unless you're a tech company. Today, I would say that the bulk of people are familiar with Zoom, with WebEx, with Google meetings, other aspects of life that have changed. What is now very normal is not going to the supermarket and ordering to have your groceries delivered, paying with them with an e-wallet, so Stripe or Venmo or Square. What else is now a new normal? No longer going to a gym and hopping on your Peloton bike and having your virtual trainer and riding alongside people all over the world. The way that we conduct our buying. Very few of us are not familiar with buying things through Amazon or having our home-based business built with a Shopify website, Etsy, again, WebEx, and then BigCommerce, which is in the Shopify space. The theme right now of what is now a new normal translates into the stock market. And if you look at the share appreciation of these companies that I have highlighted here, and amongst others, you'll see that even during the pandemic, these companies are making new highs. And why is that? It's because of that underlying theme. And if you look at our business at Weyland Tech, every aspect of every business unit fits within that theme. And it's by no means reactionary. These are not new things that we're doing. These are things that we've been doing since inception, or in the case of Logiq, they've been doing for a number of years, and we just acquired them because it is a perfect match with our existing business. Talking about mobile commerce, the reason that we focus on what's called mCommerce instead of eCommerce is because what we're seeing in the US market, and certainly in the rest of the world, especially in emerging markets, is that most of the business that is conducted online is through the means of a mobile phone instead of a desktop or a laptop. And that is specifically because in emerging markets, you have had an entire generation of people that have not had desktop computers or laptop computers. They've made the jump straight to smartphones. And so that is how they interact with people. That is how they get their information, their news, their weather reports. All of the things that encompass their daily life are now done through the phone, including commerce. So they would not hop on their desktop to search Amazon. They would use their mobile phone, and they would use one of their local mCommerce providers. If you look at pure numbers, it's any way you look at it, it's massive. There's 5 billion unique mobile users on the planet. The emerging market that we're focused on is Southeast Asia. It is no different in terms of acceptance and scale, in terms of growth through the mobile device of actual shopping. Here in the US, what we're also seeing is a transition from desktop and laptop accessed buying to mobile. So mobile commerce is here to stay and is absolutely growing. What we look at in terms of the emerging market that we're focused on in Southeast Asia, analogous to the United States, is that 90% of internet users use their smartphones. There's 300 million of them within the region where we have an emerging markets focus. 3.5 hours on average is spent on their smartphones daily. And what's very notable is that the highest percent of usage of US social media sites like Facebook, Twitter, Instagram, Pinterest, YouTube is, believe it or not, out of Southeast Asia. So the point there is, it's not just the US and Europe that are accessing US social media sites. People in Southeast Asia are spending more time there than people here in the US. So that stat, I believe, is a strong takeaway, and certainly one of the reasons that we're focused in Southeast Asia. Not to mention the founder of our core product, Create App, Eddie, is from Singapore. So Southeast Asia is his home. We've had a specific focus there. I spent 15 years working in Asia, which is how I came about taking over and helping lead Weyland. And I've been back in the US for several years now, since we are listed here, and we have some very large going forward plans that are centered around the US capital markets and investors here too. So what is Create App? Create App, on its surface, is a platform as a service. people also refer to it as SaaS or software as a service. We have a specific focus on small businesses. Although we say small to medium size, I think that most small businesses have an interest in getting online. And so that is our primary focus. And that is actually the largest swath of businesses globally. And if you look at emerging markets, it's about 99% of their entire business universe are micro to small businesses. What's different about Create App? It is extremely easy to use and extremely easy to get online. That is important because if you look at most small businesses, some of them are 2 to 3 person shops. How do you run your business and also get online and then manage that business? If it's not simple enough and not easy enough, you're not going to use it, and therefore neither will your end customers. So the underlying features of Create App are such that so far no one has taken longer than 2 hours to get up and running. I would say that if you look at the broad base of the 390,000 end users that we have, a very broad percentage of them have actually gotten up and running online within 30 minutes. We have a number of people that built their site in as little as 10 minutes. It's all template based. It's extremely easy to use. It's in 14 languages in the regions that comprise the world's most active mobile users. 2 things I would point out here that are a bit different than our previous presentation and also relate to the previous 6 years since we've been doing business. If you look at our financials, you'll see that our historic gross margins have averaged about 17%. Not bad, but also not great. And as a software as a service, you would look to see them higher. The current environment that we're in, which is, again, is not an anomaly, it is here to stay, is such that everything can be done 100% online. The human element of actually being on the phone with someone, going out and paying sales calls to attract new customers, having seminars or conferences and inviting people to come listen who want to build their own home-based business, you can now do 100% digitally. And what that's led to is a restructuring of our entire process to where by the 4th quarter of this year, our margins should look to increase by over double. So we'll be looking at gross margins at 35% versus 17% historically. Our costs with that have also been dramatically reduced. Our spend historically has been about 22% of revenues. We have just completed Create App 3.0, and going forward, our R&D spend should be about 2%, so dramatically less than in the past. So you combine the margin expansion with the reduced cost, that drives towards profitability sooner rather than later. I think that sets the stage for a lot of enthusiasm around our core product. Talking about our second business unit, Logiq. Again, we acquired that in January of this year. Logiq, they are advertising technology in big data. You all will hear that theme a lot. It's extremely relevant. Again, what is that? That is taking user data of large websites, small websites, whoever the end customer is, their end customers, user behavior, purchasing habits, everything they do within that website and even others can be evaluated, analyzed, and given back to the customer, our customer, to help them offer better products and services to their end customers. So again, extremely relevant. How does it help our business? In addition to it being complementary to the existing e-commerce enablement and mCommerce enablement, from the revenue side, this year, originally we projected around 13 million in revenues. We're on track to seeing 15.6 million in contribution from Logiq this year, about 20% margins. However, next year, and this is a revised forecast, which has just come in over the past week. We are forecasting revenues just from Logiq to be in the $34 million range with 30% margins. And that is also due to an acquisition that we announced just last week. And again, we have mentioned publicly that we're looking at opportunistic M&A. This is part of that strategy. So stay tuned for more. I would also point out that last Friday there was an IPO of a company named Kubient, which is almost identical to Logiq. They came out at a valuation of 50 million, and that was 5x revenues. That implies a standalone valuation of Logiq at around $78 million. For this year, it's an implied valuation for next year of around 150 million. Again, bear in mind, this is just one of our 3 business units. So when I talk about it being a standalone value, I am not applying that to the Create App business or our emerging markets fintech business. How does Create App in Logiq fit together? If you look at the pillars here, these are the essential 4 pillars for a successful e-commerce or mCommerce transaction. I think most of you will be familiar with the names that are along the bar here. PayPal, certainly Google Maps, Instagram, Facebook, LinkedIn, Twitter. Why do we have those on there? The integrations of our platform fit into all of those and about 30 others. So what this does is our customers end up getting connectivity to their customers across the entire swath of social media platforms. The things listed here, such as marketing and analytics, mobile fintech, e-commerce managed services, and then logistics, these are components of what it takes from start to finish of someone looking at buying a product or subscribing to a service and then having it delivered or having it fulfilled. All across the chain, we have either in-house capabilities or certainly third-party outsourcing that fulfills them. So you'll hear the buzzword end-to-end solution, and we are. The recent acquisition of Logiq and then Fixel fits into our Create App platform perfectly because, again, what we were doing is providing the ability for businesses to get online. What we're now able to do is give them the ability to not only be online, but drive better sales to their customers. As far as revenue model, we operate on both a subscription model, so we get paid monthly by our customers. We are also paid on a managed service basis by large enterprises that use the current suite of Logiq services. So we've got a nice blended revenue model. As far as partners and customers go, you will see some smaller names here that are actually big names in other countries. And you'll also see some multinational tech names that are not only very highly regarded in their respective markets, yet also highly valued in the US markets. So over the years, we have endeavored to graduate up the chain and move from serving small businesses to also working with larger businesses that have under their suite of services small business customers. The part of our business that is extremely exciting right now, although maybe not so familiar to US-based investors, is what we call solutions for emerging markets. If you look at our press releases and you look at our website, you will see these 2 names, ATOS Pay and ATOS Go. What are those? An e-wallet, which is ATOS Pay, and a food delivery app, which is ATOS Go. These 2 products have a specific focus in Indonesia. Why Indonesia? fourth most populous country in the world, 90% smartphone uptake, and very interestingly, 60% of the entire population of 260 million people do not have bank accounts. 90% of them do not have credit cards. That is why we have an e-wallet, okay? And that is why we are layering on fintech apps to enable the use of our e-wallet. So why did we choose Indonesia? Well, since we started in Singapore with Create App, the largest market that is in the Southeast Asia region is Indonesia. And so migrating there with our core product and launching these two fintech solutions was our market entry strategy. What it's ended up creating within Weyland Tech is a benchmark valuation of these two businesses right now of $37 million as a combined standalone within Weyland Tech. So I know that I mentioned earlier a standalone valuation for Logiq. Well, a standalone valuation that is benchmarked against peers in this same space puts it at a valuation of around $37 million if we sold the businesses, and what that would flow through to Weyland Tech. However, given our growth trajectory this year and on into next year, we believe that by the year end 2021, that value can increase by around eightfold to close to $330 million. Again, these are benchmark valuations that are standard in the industry. We believe that exit will either be through a sale to a strategic buyer. We have been approached by regional markets such as Singapore and the Jakarta Stock Exchange about possibly IPOing there. Regardless of the path we take, the value currently is significant to Weyland Tech, and the value going forward, we believe will go up significantly as well. Financial highlights, again, we just reported the quarter. Our revenue for Q2 was $9.3 million. That was up 30% over last year. I would also point out that this is during a quarter which almost every other company had somewhat of a forecast of possibly being lower or a transitioning phase, given the uncertainty, which we certainly made in Q1. However, our Logiq division outperformed. We were up nicely year over year, and then our going forward projections have also been tempered upwards. Consolidated gross profits in the first half have increased nicely year over year. We're sitting on close to $4 million in cash as of the end of the quarter. And then the revenue outlook for this year is the contribution from Logiq, again, on track to doing $15.6 million this year with margins of around 20%. So we're very excited about the addition of Logiq. So continue to look for more news about our strategy as it relates to that business. This part, I believe, is probably the most exciting in terms of opportunity. Shopify, big name, share price performance has been exceptional this year and certainly over the past few years. They're trading at a price to revenue of 57.7. And why am I not highlighting PE on this slide? Well, if you look at these 7 companies here, only one of them is profitable. That's Stone Companies, not much of a household name. They are in e-commerce. They've got an e-wallet component, but they have an emerging markets focus on Brazil. For those of you who know, Brazil is a huge emerging market. They are the only one that has actual earnings of these. I believe that was probably due to accounting, but nonetheless, the point of this slide is twofold. One is to show the high valuations on a price to revenue perspective. The other is that few, if any, are actually earning money right now. So why do they trade at big valuations? They trade that way because they all are all part of the underlying theme of what is now normal. And these large valuations enable them to raise further funding in the capital markets, which you need to grow. You need to be taken seriously by strategic partners, and you need to have in order to adapt to changing trends within these markets. As it relates to Weyland, where are we? Well, we're at 2.2 times revenues on our current market cap versus our revenues. I think given the expanding gross margins, given the growth that we're forecasting, given the M&A path that we've taken, that does set the stage for valuation expansion. So for those of you, who want to do the math on where we could potentially be in terms of share price and valuation, even if you took some of the lower ends, of say Jumia or Veritone, and you applied it to us, I think it gives very good insight into where we could go. If you look at our growth and then you apply it towards some of the mid-range valuations, you've got considerable upside. So again, just trading to the average based on where we are now, do your homework, make your own decisions, but I believe you can come to a conclusion that would show you that we are quite undervalued. Growth drivers, from an organic perspective, again, the new digital marketing campaign for Create App, which will improve our gross margins by twofold. The cost going down significantly, and then the introduction and evolution of ad tech and big data through the addition of Logiq has a great impact on our business going forward. And as you've also seen with the addition of Logiq earlier this year, and then last week's announcement about acquiring Fixel, which I'll touch upon on the next I'm not supposed to say slide, but on the next part of the presentation. This is indicative of where we're going. When we see businesses that fit in perfectly with us and can be acquired in an accretive way, we will pursue them. We're also increasing our ownership in the ATOS Pay, ATOS Go business. We currently own 31%. We're increasing that to 51%. What you'll also see is for the latter part of this year, a consolidation of that gross transaction revenue. We're running at about a $50 million run rate. So we'll exit the year just on those two businesses with a $50 million run rate. We should be consolidating about 51% of that into our financials later in the year. Again, potential liquidity event this year or next, or maybe an IPO, and then moving on to the acquisition of Fixel. So Fixel is AI based, and AI is essentially artificial intelligence or machine learning. What is that? Well, that is enabling everything to be done without human interaction. And why is that important? Well, in today's environment of e-commerce and mCommerce, when you're on a website and you are looking for something to buy, you're comparison shopping, you are looking for the best price to value, you are trying to make a decision on what will you buy. How is that how is your behavior and how are your habits going to be analyzed and then fed to that website so that they can then again better tailor products and services that fit your buying habits? That is done through AI, because nowadays e-commerce is done and measured in milliseconds versus seconds. So you can be on one site thinking, okay, I may want to buy this. You can immediately go back to another one And unless you have the ability behind that website to be offered either better pricing or added features or ads fed to you that fit your needs, you're going to abandon that site and go somewhere else. So that is why AI is imperative to the whole advertising technology and big data. And again, that fits into every aspect of our business, whether it's our emerging market solutions, our core business product of Create App, serving SMBs, to Logiq's enterprise size customers. AI is part of all of that. So we believe that FixWorld represents an extremely exciting fit and will be part of all of our underlying business units going forward. Key takeaways, and after this I will open it up to questions. E-commerce enablement. The major theme among the stocks of companies I listed earlier, we fit exactly into that. Not only has it created value for those companies and their shareholders, but NASDAQ has hit new highs being driven by thematic companies that fit into, again, the new normal. Weyland Tech, all of our business units also fit into that new normal. The addition of our Logiq platform, adding in ad tech and big data, major revenue and profit driver for this year and onwards. Our fintech solutions, ATOS Pay and ATOS Go, are not reflected in our market cap right now. If you look at the valuation of that as a standalone in the public announcements in the past and currently, that we're preparing for a major exit of that within 12 months, and a potential for that to be as much as 8 to 10 times higher. I think that there's considerable value there. And then our current capital market valuation trading at a major discount to our peers, 2.2 times revenues versus a peer group of 26 times. And again, all the catalysts are in place for valuation expansion, whether it be the announcement of someone taking a strategic stake, whether it be an announcement of us forming a strategic partnership, other IPOs or other liquidity events of companies that are similar to ours. Look at the valuations there, look at ours, look at the sum of the parts of what we've discussed here, and then look around the peer group. You'll see that there's a big gap, and can it be filled? I believe so, and what that will take will be actually through formats like this, getting in front of more investors, whether it's retail investors, institutional investors. This is important because telling the story, letting more people hear the message, seeing that there's a major disparity in the valuation gap is part of how we're going to get there. Jack, I can open it up to questions, and we'll go from there.
Okay, Brent, can you hear me?
I can.
Okay, perfect. Okay, so let's see. We're going to start off with the questions that came in last night, and then we'll jump to any live audience questions. Again, if you have any questions, please put it into the chat question there. Okay, so, Roger's asking, update on NASDAQ listing. And I guess any update on NASDAQ listing?
Yes, so we get that question a lot. Why? Because we applied back actually late last year. I would sum it up. We do meet all the quantitative requirements. However, there are about 260 other companies right now that are also in the process of trying to uplist that also meet the quantitative requirements. NASDAQ has 4 examiners right now. Their responsibilities are IPOs. Many of you are familiar with the IPO calendar being quite robust recently. So the examiners handle all the IPOs. They also handle continued listings, of which there are hundreds. And then they handle 200 to 300 uplistings per year, of which anywhere from 20 to 30 are actually able to be uplisted. So with 4 examiners, it is somewhat of an ongoing, internally frustrating, but we believe we'll either prevail there or we've also been in talks with 3 other exchanges about possibly listing there if things continue to drag on. So we are actively in discussions with other exchanges. We do meet the quantitative requirements for all of them. It has always been our goal to uplist to a senior exchange. So I hope that answered your question.
Okay, next question is from Steve, is asking, what is your acquisition criteria for potential targets?
I'm sorry, could you ask?
Yeah, what is your acquisition criteria for potential targets?
Okay, on an outbound basis, on an inbound basis, we're looking to make an acquisition. The first acquisition we made was in January this year of Logiq. And again, that fit into the whole theme of e-commerce enablement because you have to have an ad tech and big data component of that. So bringing in Logiq, criteria there was, is it a fit with our current business? Absolutely. Secondly, are we able to effectively acquire them without either laying out a large amount of cash or it being too highly dilutive from a stock side, and can it be accretive? The size was good. It was a consideration of 25 million in stock. They will generate about 15.6 million this year in revenues. And so if you look at the valuation we paid, it was about 1.5x revenues. So we did acquire that at quite a large discount to the peers. Another criteria we look at is on a going forward basis, does that supplement our product pipeline significantly without being too much of a radical departure from our existing business? So that's what we look at. As we grow and our market cap expands, will we possibly look at other possibly equal size companies? Only if we could get them at a good price and if they're highly accretive. So I hope that answered your question.
Okay, Cal is asking, what are your plans for AI for e-commerce?
Okay, again, we just acquired Fixel. That was not a very short-term evaluation. We've actually been looking at an acquisition with the Logiq subsidiary since we brought them in. We started down the path with them middle of last year. So it took a good 8 months on a getting to know them better, due diligence path to close the acquisition. And along the way, as part of the product roadmap, as part of that actual strategy, what was it that would enhance their ad tech business? And that component was AI, a machine learning platform that could better serve the ad tech model that they have, and in turn service micro to small businesses that have that need, medium to enterprise size businesses that also have that need. And so the addition of Fixel was to take their platform, and that is in use incidentally by a number of micro to small businesses, and to fairly well-known consumer websites, Kelley Blue Book and Auto Trader. The goal there is to not only layer it into the existing customer base that we have, yet also within the Logiq business unit to approach other large enterprise customers. And we will be talking more about this strategy as we move forward. And I think that'll be quite exciting. So there is an absolute ability to scale up what Fixel has built on a small level into a much grander theme.
Okay, next question is plans for entering other emerging markets, i.e. in Asia or Africa like Jumia?
That's a good question. Okay, so ATOS Pay and ATOS Go, those are the brand names that we operate under in Indonesia. So just for by way of reference, ATOS in Bahasa Indonesia means immediate. So ATOS pay, immediate pay, ATOS go, immediate go, or have your food delivered. The underlying platform or the tech that we built into those two is very easily transportable into other emerging markets. Over the past few years, we have talked to other groups in neighboring countries, and we've looked at Myanmar, we've looked at Vietnam, we've looked at the Philippines, Thailand, we've looked at parts of Africa as well with large population bases, as well as South Asia, like Pakistan, a few others. The real key to launching in other emerging markets is having a team there that can enable that, because having the tech is just not enough. You can have a great platform or a great product or great service and still not succeed without the actual people there on the ground who know what they're doing. And what is that? That is understanding local tastes. Although I worked in Asia for 15 years, being able to sit in Jakarta, Indonesia, and say that my collective experience through Wall Street back in the late 80s, early 90s, Silicon Valley throughout the mid to late 90s, Hong Kong and Shanghai advising tech companies on capital raises and strategic partnerships throughout the 2000s, did not necessarily, actually, it did not make me at all an expert on what would work in Indonesia as a local market. So the team that we have there, ranging from the leadership level all the way down to their salespeople, to the admin, every aspect of that business is 100% local. And so having the understanding of what's going to work and what's not going to work is imperative. And now I might just touch on this as well. One of the things that we've succeeded in is not taking the approach of competing, it's more of positioning. Because in order to compete with very large companies, look at the ones I've just mentioned. I mean, they've got multi-billion-dollar market caps. They've raised billions in funding. Competing against those with a sub $100 million market cap and having only raised sub $20 million over 6 years, extraordinarily difficult. So how do you negate that? Well, it's in the positioning. And so if you can position to where you're going after other aspects of attractive markets that are attractive to you and will eventually become attractive to larger peers, then you are effectively positioned. So how did we go into Indonesia with ATOS Pay and ATOS Go? It was with that mindset, positioning. The way that we do business there with these platforms took a unique approach. So we never went head on against the giants there. We just positioned carefully. We take the same approach in other emerging markets. So we would have to have the local team that understands that, and they would have to have that same mindset of how do you position, because every market nowadays has some incumbents that are very well capitalized. So I hope that answers the question.
Okay. Any other questions in the live audience? Okay, it looks like I think Brent. It looks like we're done with the questions. All right, Brent. I want to thank you again for giving us an update on Weyland, and we look forward to hearing back from you in early September. Of course, you may have news between now and then, but we look forward to seeing your next update. And I want to thank everybody in the audience for joining us once again, and we'll see you on the next live stream.
Great. Thank you, Jack. Thank you, everyone, for joining.
Thank you again, Brent.